All right, what is up, everybody? Welcome to day 2 of the boot camp. Today we're gonna be going over candles, trends, and basic strategies. Right, so nothing too wild today. Basically, all I want to break down is beginner stuff when it comes to trading, right? So now from today moving forward, we'll be working more on the charts. There will be a couple days where maybe it'll just be a talking video or whatnot, or whatever it is. But going into candles, like we talked about yes or on the first day, each candle represents open, a high, a low, and then a close to move on to the next candle. Now this happens on every time frame from the 1 minute up into your daily time frames, right? So what this represents is, if we break this down, this daily candle is how much price moved from the open, the high it made, and the low it made up until when it closed. Same thing with the 4 hour. This is a 4 hour candle, right? Opening up at 7 a.m. and the next candle won't form until 11 a.m. for in the next 4 hours. 1 hour candles open up every hour and close every hour to start a new hourly candle. Same thing with 30, 5, 1, and so on, right? So what we have to do is pretty much determine where is price going to move on any given day. Now that we'll be able to get into later on in the boot camp, but for now we'll just keep it basic, right? Um, Candles do tell a lot. Notice how this candle is a little bit bigger in size, right? So what that kind of tells me is something may change, right? I'm not going to exactly say what the changes that we're expecting, because this particular pattern or this particular move from here to there is a sign of something that we'll go over later on in the boot camp as well. Keep in mind, these are live charts as well. So from when price closed on Monday's trading day and opened up on Tuesday's trading day, right? Keep in mind, when I say Tuesday, we're looking at this as trading days, not the actual day. So that being said, this is where price closed. This is where we open. Notice at the bottom here, it says 1:45 p.m. and this candle is 3 p.m., but we're on a 15-minute chart, right? This is when the session break happened. So with that being said, moving on into trends. A trend is basically this. If I were to take this line and just move price up, this is price trending higher. If we do it from this low to here, this is price trending lower. Same thing here. Price is trending higher. This isn't the best example because this is a consolidation, which let's talk about this as well. 15-minute consolidation, there's no real trend. These types of conditions are not the best to trade. So typically we won't trade them. However, you can still capitalize off of the consolidation, right? Every time we hit a low, we expect to go higher. So we hit a high, we expect to go lower. From a low, expect to go higher, higher to low, lower to high, and so on. Now, that's not exactly how price moves, but that's typically what we'll see, right? But dipping into before the consolidation, we have another trend here. I was market to there before price broke, right? And how we mark these trends is how we basically dip into basic strategies, right? So there's a couple different strategies that basic retail traders utilize. Now, these include support and resistance, supply and demand, trends, and breakouts. Now, support and resistance is essentially, if I were to mark out price here, every time price reaches this area, we sell back down. So this would be classified as resistance. Now, what people tend to do is every time price reaches here, they'll sell. From here, we have support. So what they'll do from here is buy. Now, this is why we do not like to trade this particular consolidation, because this is pretty much just trapping buyers and sellers into a real move, which would have been a trend to go higher, right? So what we're focused on is finding the clean moves um, from when price actually shows that it's ready to go a certain direction, right? And we do that by identifying certain lows and highs of the candles. um, Another thing that we tend to see is breakouts. So if we still have these support and resistance zones marked, what traders will do is essentially when they see a close below or price breaks out, meaning this candle here closed below these two lows, and to them signified that price is ready to move lower. So they'll take sells here. I don't probably put stop loss in this area and target a recent low or just wherever they think price is going to go. Now, clearly, this was not going to work because price is going to move higher. Thus, this is why we need to understand the footprint of the market, right? So if we know money moves the market, we need to know where the money is, meaning if does this high signify anything? Does this low signify anything? Same things with all these highs and lows. Um, Same thing with gaps in the candles, right? These are all things that we look for. Um, Going back into candles itself, one thing I always like to say is can't type today. Now, this kind of will hint into something that we'll go over later on, but candles tell the story, wicks do the damage. Now, again, repeating what candle and a wick are, the wick is going to be the line, the candle is going to be the body. So, one thing we'll go over is exactly what this means. But for you guys to start to understand this, at least just kind of see on a chart basically um what I'm trying to get at here, right? Leave it in the comments what you guys think I'm specifically talking about. But when I say candles tell the story and wicks do the damage, right? Because once you figure that out, you're kind of already ahead of all the other people that are going through this boot camp currently, right? All right, so before we finish off, let's just go over supply and demand. Now, supply and demand, I will say that we use it in a way, not like the typical supply and demand trader. But what supply and demand is typically will happen around support or resistance, right? So a demand zone will form at a premium, and what supply and demand typically wants to do is sell a demand, buy a supply. So they'll mark out zones like this or like this where they see prices building up a demand, right? Now, we don't know for sure that that's what price is doing, which is why I don't like supply and demand. To me, all they're doing is marking areas where price is accumulating and let's say probably like here. They mark out areas where price is accumulating, meaning they see like a couple bodies or price just in a certain area, and they'll say, okay, well, we're gonna sell here. Well, sure, that works in this instance. If we try to get here, you almost get stopped out depending on your slippage, right? So price would reach up and then sell back down. Now let's try it here. Here you're getting stopped out. And then this example here goes back to, where'd it go? I accidentally deleted it, but basically the wicks doing the damage part. And then same thing here. This it's not the best example because this is the new week opening gap. So let me just scroll back, and I'd say this would be a zone that supply and demand traders would trade into. Now keep in mind it it is a technique that I used before and I was able to have success with it, but I never understood why the market does certain things in these areas, right? And you'll never understand from only utilizing supply and demand. You'll just see a demand or supply zone, market up. The market will hit that area and then either go to profit or stop loss, but you won't know why. That's one of the reasons why I do not like any of these. Because support and resistance, yes, we see price find support in areas, and yes, we see price find resistance in areas, but that does not necessarily mean that support and resistance is what's going on, right? That would have to mean that um, every time we hit these areas, price is specifically looking for support level to bounce higher. But we could see if this is support. Again, wicks do the damage, candles tell the story. We know that this is not what we want to look for during these conditions or even just looking to take a trade on that. Trend lines, again, is another variation of support and resistance. People like to really mark out perfectly what the trend is, and every time it hits the trend, they'll sell. If it breaks above the trend, they'll buy. Pretty much all it is for trend lines. Cool. So day two, again, pretty simple. I don't expect anything pretty advanced until I say like day 7. We'll get all the beginner stuff out the way and then really start to hone in on the true institutional theories that we trade in this Discord, right? I hope you guys found this useful, though. I will be posting the Discord link in the description, so make sure you guys join that. And I'll see you guys again for day 3.